Welcome to the Deep Dive. Today we're tackling Titan Company Limited, trying to really understand their story for the financial year that just ended, March 31st, 2025.
Exactly. We've got their latest earnings presentation right here.
And the mission, as always, is to dig into what these numbers actually mean for where the company's headed.
Because you want to be in the know, right? But maybe without reading, pages and pages of reports.
Precisely. That's what we're here for. We'll look at the different bits: jewelry, watches, eyewear, their newer stuff.
Emerging businesses, yeah. And what's happening overseas, their strategies.
And just to set the scene a bit, they hit a pretty massive milestone this year. Crossed, 50,000 crores in revenue?
That's the one, a huge number.
Okay, let's unpack this and see what's really going on under the hood.
Right. So for the full year, FY2025, Titan reported a total income of $573 billion.
$573 billion, wow.
Yeah. And it's important to note this figure excludes their bullion and digigold sales, so it's really focused on their core products.
Got it. So jewelry people actually wear watches, glasses.
Exactly. And that income, it represents a pretty significant 22% growth compared to the year before.
22% growth in that scale, that's substantial.
It really is. And crossing that 50,000 crore mark, it's more than just a number. It kind of signals their growing strength in the market.
Gives them a much bigger base, I suppose,
Yeah.
for future expansion.
Absolutely. Think about cross-selling across their brands, more potential there now.
Makes sense. So a 22% jump. How did the market kind of value them at the end of the year?
Good question. As of March 31st, 2025, their market cap on the Bombay Stock Exchange was $2,720 billion.
Okay, $2,720 billion.
Right.
That definitely puts their size into perspective.
For sure.
Right, so let's zoom in a bit. That last quarter, Q4. Anything particularly stand out in those final 3 months?
Definitely. So for Q4 standalone, just Titan itself, total income hit 12,730 crores.
Okay.
Which is a strong 23.8% increase year on year.
Almost 24% growth just in the quarter. Impressive.
Yeah. And the biggest piece of that pie, jewelry, brought in 11,232 crores. That's up nearly 25% itself.
And profitability there, how did that look?
The EBIT margin was 11.9%.
11.9%. So just remind us, EBIT margin is basically...
It tells you how profitable their main operations are. So the revenue left after their direct costs, but before you factor in interest and taxes, it's a good measure of core business health.
Okay, 11.9% is pretty healthy for jewelry. What was driving that growth? Was it specific types?
Well, they saw really good traction in plain gold jewelry and also gold coins.
Ah, okay.
But interestingly, the high gold prices we've been seeing, it did seem to impact the share of studded jewelry sales a bit, made it a smaller part of the mix.
Right. People may be opting for plain gold when prices are high. Makes sense.
Could be. But the other really interesting thing, they attracted a lot of new customers. 52% of their jewelry buyers in Q4 were first-timers.
52% new buyers. Wow, that's huge. That really suggests they're expanding their reach, not just relying on existing customers.
Exactly. It's a very positive sign for future growth.
Okay, so jewelry strong, lots of new faces. What about their other big segments in Q4? Watches and wearables.
Right, watches and wearables. They reported 1,126 crores in total income. That's up just under 20%.
Solid growth there, too. And the margin.
Pretty similar to jewelry, actually. EBIT margin was 11.8%.
Okay. What was selling well in watches?
Analog watches were the main driver here, but they also had strong results from their more accessible fashion brands like Fast Track and Sonata.
So hitting both ends, the classic watches and the more affordable fashion stuff.
Seems like it. Yeah, it suggests their portfolio is kind of resonating across different price points and tastes.
Good strategy. Okay, how did eye care do in Q4?
Eye care brought in 192 crores. That's a 15.7% increase year on year.
15.7. Okay.
And their EBIT margin was 10.4%. Here, sunglasses were the real standout. Sales grew faster than other categories like frames or lenses.
Sunglasses leading the charge. Interesting. And finally, those emerging businesses. Tenera, fragrances. How did they shape up?
Right. That group, Indian dress wear, fragrances, fashion accessories, reached 102 crores income. Growth was more modest here, about 5.2%.
Okay.
And the EBIT margin was negative, minus 36.3%.
Oof, minus 36%. So still very much in investment mode there.
Definitely looks that way. They haven't hit profitability at scale yet, although within that group, the fragrances category actually performed quite well.
Okay, so some bright spots, even within the emerging bets. That gives us a good feel for the standalone Q4 parts. What changes when we roll it all up? look at the consolidated numbers for the whole group.
Yeah, good point. When you look at the consolidated Q4 figures, the total income comes out slightly higher at 13,891 crores. That's 21.4% year-on-year growth for the group.
Okay, still strong growth overall.
Yep. Jewelry contribution is 12,112 crores, EBIT margin around 11.0%. Watches and wearables at handbars 134 crores, 11.7% margin. Eye care euro 193 crores, 10.0% margin. Pretty close to the standalone numbers.
Right, mostly similar. But what about the other bit?
Yes. The segment they call Other Businesses. This bundles emerging businesses with their engineering arm, Teal. That segment reported 385 crores. But here's the difference. That was actually an 18.1% decrease compared to last year.
An 18% drop. Okay, so that's mainly Teal pulling that number down.
Exactly. The EBIT margin for that combined segment was 6.8%. So you can see Teal's performance really affects that consolidated other line.
Right, definitely. That dip needs a bit more explanation later. But first, let's maybe dive a bit deeper into the highlights for each main business. Starting back with jewelry, but just within India. What were the key trends?
Sure. So domestic jewelry, really strong momentum. We mentioned the higher ticket size people spending more per purchase was a big driver for gold jewelry.
Right.
They also saw more people buying studded pieces and gold coins, even if the share of studded was down maybe. And solitaires bounced back. More buyers, though maybe for slightly smaller stones perhaps.
Interesting nuance. And digital, still a big factor.
Hugely important. Digital channels have a massive influence on jewelry purchases now, even if the final sale happens in store. And they're definitely not slowing down on opening new stores, more Tanishq, more Mia, expanding that physical reach.
Makes sense. What about Carrot Lane? They started online but are pushing stores too, right?
Absolutely. Carrot Lane also had strong revenue growth, and they did well in categories besides just studded jewelry, which was their initial focus.
Diversifying their product mix.
Seems like it. Gold prices maybe affected the number of new buyers slightly, but again, those who did buy spent more, higher average bill value. And yeah, strategic store expansion continues for them too.
Okay. Moving over to watches and wearables within India. What were the key drivers there?
Well, like we touched on, analog watches were a real bright spot. Strong performance.
Classic stuff still sells.
It does, and their premium watches sold through Helios stores also did well, so demand at the higher end too. But importantly, Fast Track and Sonata, the more affordable brands, showed really strong growth too. So they're capturing that wider market effectively.
And you mentioned margins improved.
Yeah, that healthy sales increase led to better profit margins. It's what we call operating leverage.
Right. Fixed costs spread over more sales.
Exactly. Makes each sale more profitable. They're even trying out a new super premium concept, Helios Luxe. And their overall retail network is massive. Titan World, Helios, Fast Track stores, plus partnerships.
Sounds like a very layered strategy in watches, covering all the bases. How about eye care domestically?
Eye care saw healthy growth in the actual number of pairs sold, good volume growth.
Okay.
Sunglasses led the product growth, as we noted, for Q4. And an interesting point, the international brands they stock actually outperformed their own house brands in sales growth.
That is interesting, relying a bit on those big global names.
Seems to be helping drive traffic, perhaps. Margins improved here, too, helped by the revenue growth and better cost management, better gross margins. And they're really pushing the omni-channel thing, integrating online and offline.
Seamless experience.
Yeah.
Got it. What's the latest pulse on those emerging businesses? Any kinds of gaining more traction?
Well, within that group, women's bags and fragrances showed promising growth. Fast Track perfumes apparently doing particularly well.
Okay. Fragrances are clicking.
Yeah. But Taneira, their Indian dresswear brand, actually saw sales dip slightly in the quarter.
Oh, okay. Bit of a mixed bag then.
It is. They seem to be experimenting, piloting a new kind of experiential store for their skin fragrance brand, opening new stores for iArth, their contemporary wear brand. But they also closed one Taneira store, so it feels like they're still figuring out the right formula, refining the strategy there.
Yeah, adjusting as they go. Makes sense for newer ventures. Okay, let's pivot outwards. International business. How's Titan performing outside India?
This is a really positive story, actually. Strong growth in jewelry overseas, especially in the GCC, the Gulf countries, and North America.
Driven by?
Mostly new store openings. They're physically expanding their presence there. Watches are also expanding significantly in the GCC.
Right.
And even eye care and fashion accessories exports are showing good growth. A key development was opening their first multi-brand lifestyle store, kind of a mix of their products, in Sharjah in the UAE.
Ah, okay. So a broader retail strategy internationally, not just single brand stores.
Seems like it. This international growth is, well, it's quite notable. It suggests the Titan brand, or brands, are resonating beyond India. Huge long-term potential there.
Definitely. But also challenges, I guess. Managing different markets, supply chains.
For sure. It adds complexity, no doubt.
Okay. Now let's quickly loop back to Teal. Titan Engineering and Automation. We saw it drag down the other segment. What's the story there?
Right. So as we mentioned, Teal's total income was down. They said it was mainly due to the timing of new order inflows.
Meaning orders came in later, or?
Yeah, or maybe recognized later. Specifically, their automation solutions business revenue was lower, but their manufacturing services division actually grew.
Okay, so one part down, one part up within Teal.
Correct. And importantly, the automation side, even with lower revenue in the quarter, apparently has a strong backlog of orders.
So future revenue is potentially already booked, just not recognized yet.
Exactly. Suggests future work is lined up. And within manufacturing services, their aerospace segment did exceptionally well, hit its highest ever quarterly output.
Okay, so a bit of a timing blip maybe rather than a fundamental issue. The order book context helps.
That seems to be the explanation, yes. These project-based businesses can have lumpy revenue sometimes.
Understood. Now, stepping back to the big picture again. What's the management saying about the future? What are their plans?
Well, the clear message seems to be focus on gaining market share across all their businesses.
Keep growing their slice of the pie.
Pretty much. They're also stressing, adapting to changing consumer needs, being responsive.
Makes sense. Anything specific highlighted?
They did specifically mention expecting eye care to have even better growth in this current financial year, FY2026, and they reinforced that the international expansion is on track and remains a key priority.
Okay, so continued focus on market share, eye care growth, and international push. Sounds like a plan. Now, beyond the financials, Titan talks a lot about ESG, sustainability, social responsibility. What stood out there?
They really do have a broad range of initiatives. Titan Kanya, their program for girls' education, reached over 65,000 girls just last year.
Wow, that's impactful.
Yeah. Then there are skill development programs placing thousands of underprivileged youth and people with disabilities into jobs. Project Tarasha supports Indian arts and crafts. Project Happy Eyes for vision care.
Quite diverse.
It is. Plus water conservation projects. They've apparently stored billions of liters of water, increasing renewable energy use. And making progress on gender diversity. Women are now 30% of their workforce.
30%, that's a solid number.
And they've won awards for ESG and business practices, too. It seems like a genuine, broad commitment alongside the business itself.
It's impressive to see that scale of social focus. Okay, nearly there. Finally, just quickly, dividends and ownership. What are they doing for shareholders?
For FY25, they've proposed a dividend of 11.00 per share, so a direct return to shareholders there.
11 rupees per share. Okay.
And the presentation also breaks down the ownership, who holds the shares.
How is it?
Promoters, institutions, foreign and domestic, insurance companies, retail investors, the usual categories.
Right.
And it's worth remembering, Titan's market value, that market cap, has grown massively over the last 5 years. Really highlights the long-term value they've created for investors.
Good point. Okay, that really brings it all together.
Yeah.
So let's try and summarize. What are the absolute key takeaways for you, our listener, from this deep dive into Titan?
I think the big picture is just strong overall growth in FY25. Hitting that massive 50,000 crore revenue milestone is key.
Yeah, that number really sticks.
And we saw healthy performance across most core businesses, especially jewelry and watches. They're clearly investing strategically international, digital.
And that consistent focus on sustainability, the ESG side, seems like a core part of their identity, too.
Absolutely. That comes through strongly.
Definitely some moments, I think. The scale, like you said, the way different brands are performing, showing they can cater to, well, almost everyone, it seems. And the social impact numbers are quite something.
Yeah.
So hopefully this deep dive gives you a really solid handle on where Titan stands right now and the direction they're heading.
Indeed. And maybe leaves you the thought, considering this diverse portfolio, this growth path, what do you see as the biggest opportunities or maybe the biggest challenges for Titan in the next few years, with consumer tastes always changing?
That's a great question to ponder. What are those big hurdles and opportunities ahead? Definitely something to think about.
For sure.
Thanks for joining us for this deep dive into Titan Company. We hope you found it insightful.
Yeah, hope it was useful.
Until our next exploration, take care.